Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we push ahead to the advertising event of the year and sit down with the head of the company streaming Super Bowl 58. You guessed it, Paramount CEO Bob Bakish joins us to break it all down.
Plus, we stick with advertising and streaming and sit down with the head of partnerships at X as the social platform also announces a deal with the WWE.
And we take a look at the state of sports betting amid the sporting event of the year and sit down with FanDuel CEO Amy Howe. Just apart from the Super Bowl anticipation.
Well, it's the end of what's been a pretty busy earnings week. Two names behind me, Pinterest and Affirm, both moving to the downside. Pinterest is interesting. So sales missed, but it had top-line growth of 12%. Its monthly active users still continue to grow. But I think there's just a lot of read-through concern with what we're seeing with Snap. They've kind of pegged their strategy on direct response ads, where if you go on Pinterest, maybe you're decorating your home, you're getting married, whatever it is, they want to amplify the opportunity to click through and actually buy something. They were down significantly after hours, like 20%, but they announced a deal with Google, which again made the street feel a little bit better because you're saying, okay, Google's global, and there's a chance that you take the images on Pinterest and Google's technology takes you through to a buying opportunity. Affirm is also lower. Basically, they said that transaction volume this year isn't going to be what the street expected. That has got some nerves going in the street. We're going to speak to Affirm CEO Max Levchin later in the show. Another deal we're tracking, but this time interesting, TKO, the WWE parent, doing a deal with X, the platform and company formerly known as Twitter. It's a weekly series of short-form WWE matches. WWE produces the content, X does the distribution, and we'll hear from my interview with X's head of partnership, Brett White, later in the program about why they did that, as well as the Super Bowl, which I think is the dominant theme of the show today.
I mean, it is a theme, but so too are these markets, so too are these deals on content. And Ed, you so brilliantly summarized the micro. Let's go to the macro a little bit with Megan Horniman. She's with our CIO of Verdance Capital Advisors. And Megan, we're talking about content at the moment. We're also more broadly talking about where the investor's mind is at when it comes to content producers and technology more broadly. Can we still anticipate a reason to be buying into heady valuations when it comes to tech and more broadly in an S&P at 5,000?
Well, we wouldn't at this point. You're looking at valuations that are really top heavy here. You mentioned it. I think from the technology standpoint, what you're seeing is this drive forward in these names is specifically just that fear of missing out. Investors are worried about missing out on that next new evolution that we see here from technology. And while this is a long-term theme, we just think there's a price that you should be willing to pay for. And at this point, I think it's just a little bit expensive. I think there can be some consolidation as we go forward.
Megan, economic data has been really important for this show, Bloomberg Technology this week. You know, historically, we may not have focused as much on CPI revision or not, but we are, because of the point you make, valuations and what will or won't happen with the Fed and rates. Is that how you approach the technology sector, its sensitivity to rates in 2024 in particular?
Yeah, I think there's, it's sensitivity to rates, but also the valuations. So we're seeing rates move higher, and these names are still moving higher, the technology side. So that's why I believe it's just part of this fear of missing out that investors have. They're going to miss out on this tech rally. I just think from an interest rate perspective that there's risk there, and what's going to take some steam out of this rally will be when there's, I guess, a bit more realistic view on what the Fed can do. Where we have rate cuts priced in now as early as May. I think that still is a little aggressive. Inflation is coming down, but it still is above the Fed's target. And what we're concerned about here from the macro level is the dovish tilt that the Fed took back in December has now reignited the economy, and it is really putting a risk of reigniting inflation. And we're seeing that in some of the economic data that we've gotten in just the past couple weeks.
I want to linger on something that Dara Khosrowshahi told us, the Uber CEO, on the show in the last couple of days, which is basically all around the world, they see the consumer being really strong. And the bit that maybe we didn't cover as deeply as well is they're also seeing increased corporate spending on their platform. And I thought that was just a really interesting proxy for the global economy. How do you feel right now about where we are globally, consumer strength, corporate spending, all the things that we've had such anxiety about for the last couple of years?
So for the consumer standpoint, you have to remember they are spending, but they're spending because the labor market's been strong. Labor market is always a lagging indicator, and we've seen in this earnings season a lot of layoffs. We're waiting to see how that filters into the employment market and how that filters into the data. That's a bigger concern that we have. The other thing from the consumer standpoint is they're spending on credit. Credit card debt is rising. Along with that, you're seeing not only auto delinquencies, but also credit card delinquencies starting to rise. I think the consumer is just still stuck in this mentality that the Fed will come in and save the day at any sign of weakness. This is what we've been dealing with for the past couple decades. This is not the case anymore. We are in an inflationary environment where the Fed has to be very careful on what they articulate to the markets, as well as what the economy can handle from the inflation standpoint.
Very briefly, Megan, we very easily default to talking about equities. But bond markets are bigger, and indeed we've had a lot of treasuries taken down this week. What about corporate debt in this particular instance, particularly among some of the tech names and tech space more broadly?
So I have to be honest, corporate debt has surprised me as far as how well it's performed last year and even starting out this year, because you have been seeing defaults rising, and defaults are expected to continue to rise, but yet spreads in the corporate market in investment grade as well as the high yield market are extraordinarily tight. Yeah. This is just, again, I think people chasing for yield, and I don't think going forward that that's something you want to do, especially when you're looking at spreads that are just so tight.
Megan Horman, CIO at Verdance Capital Advisors. Great to have time with you. Thank you.
Super Bowl 58. Almost upon us. Big day for sports fans and for ad lovers too. How are you going to watch? Well, across Paramount Properties, CBS, Paramount Plus, Nickelodeon for the kids even. Now, joining us to discuss the Sunday Super Bowl and much, much more, Paramount Global CEO Bob Bakish, live from Las Vegas in anticipation of Sunday. And I'm interested in NFL on CBS. Of course, you've had a record regular season. We're anticipating record eyeballs for Sunday. What about those ads? Bloomberg Intelligence think you might be raking in as much as $700 million. Is that the right sort of amount, Bob?
So, Caroline, it's been an incredible season for the NFL on CBS. We set the high watermark for ratings since the property returned in 1998. We set the all-time record for a divisional playoff game. And to your point, we set the high watermark for ad sales for a Super Bowl. And it's looking like on Sunday, we'll set an all-time viewing number with any luck. So it's an incredible year to be the NFL on CBS.
We're a technology show. From a technology perspective, just how much of a feat is it to be able to put this across all your properties, to be able to have SpongeBob doing his thing, whether it's on Nickelodeon, but also to be consuming it via cable or streaming?
Yeah, so the infrastructure around the Super Bowl to ensure that the world's audiences can see it is truly extraordinary. I mean, the number of cameras, remote cameras, et cetera, I think it's like 140 or something like that. And to your point, we obviously have the main feed on CBS here in the United States. We have the first ever alternate telecast of a Super Bowl on Nickelodeon, which is going to be super fun. And to your point on tech, we're actually going to do all the graphics and enhancements real time. When we did the last Nickelodeon game last year, we did that very quickly, but it wasn't real time. The tech is now allows us to do it real time, so that's super cool. And then, of course, we have it on Paramount Plus, streaming simultaneously. So yeah, a lot of infrastructure, a lot of people behind the scenes, but we're feeling great about it, and we've been doing Super Bowls longer than anyone else, so we'll get it done.
Let's talk about the anyone else. Let's talk about how, well, sports content is so hot right now and everyone wants to think about how we can offer it through a streaming product. I look at Disney, Fox and Warner Brothers, the announcement this week. You've shown, and I think about how Super Bowl, actually 2021 was how you announced Paramount Plus and the breadth of content. But how do you tackle the focus on sports coming from rivals?
So we love sports here at Paramount. Obviously, it's a key component of CBS. I think about it as a slice of the wheel. It's part of our programming offering. Same with Paramount Plus. You know, we talk about Paramount Plus as news, sports, and a mountain of entertainment. Obviously, the NFL is a key part of that. But I want to emphasize that we like a broad product. We've looked at sports-only plays in digital, both a standalone basis and with partners, and we continue to believe that broad is better. We see that in people coming in for sports properties, subscribing for things like the NFL. But if you look at the sports viewer on Paramount Plus, believe it or not, 90% of their engagement, i.e. time spent, is with non-sports programming. So again, bring them in with sports, but key to the model is elongate it and entertain them, quite frankly, with other stuff as well. We firmly believe that leads to accessing a bigger TAM, bigger market, and it is better for the business model, and so we like broad.
For our Bloomberg television and radio audience around the world, we're speaking to Paramount Global CEO Bob Bakish. It is Super Bowl weekend. And Bob, just what you were saying about the profile of the consumer on the platform. You know, I use the platform for Champions League football. And you have such a long season with the Champions League. You have your in-studio talent component, but you also the ability to show multiple games in the same evening. You have choice. And then at the end of the season, you have a big finale. And the NFL kind of works the same way, right? You had a great regular season, as Caroline points out. But proportionately for your business, what's more important? The big standalone single event this Sunday or the traction you get over the duration of a season?
So a couple things. As we said, you know, the NFL this season set a record for CBS in terms of viewership since 1998, which is pretty extraordinary. And clearly the divisional playoff game, which also set an all-time record, was important. But I think it's the arc of the whole thing. And frankly, there's nothing like the Super Bowl in the world. And obviously that's a big event for us. But you mentioned UEFA too. We love UEFA. As you know, the UEFA season is going to start right after the American football season. And that is also a great product for fans of Paramount Plus. And we just extended that deal, and the new format for UEFA includes a more exciting, so I'd call it playoff format. So again, great product, and we do see people consuming that product alongside entertainment product. So we love sports, we love the NFL, we love UEFA, and we love it as a part of Paramount Plus.
I found it interesting what you said about the consumption of non-sports content. Halo Season 2, prime example of that. You talked about UEFA following the Super Bowl. How much will you be putting into advertising this weekend? So while you've got all those eyeballs, you can say, hey, this is what else Paramount Plus is offering in the coming weeks and months.
Great point. We are using the Super Bowl as a showcase for Paramount Global. I'm sitting here at our CBS set on the Strip in front of the Bellagio. We had CBS Mornings going from here today and yesterday, and we have other properties operating here in Vegas. We are also using the Super Bowl as a promotional platform. So you see a new Pluto look and feel brand campaign rolling out. You see Paramount Plus spots. You see the Bob Marley movie, which is opening on for Valentine's Day weekend. So yeah, we're showcasing Paramount Global to the biggest audience in the world on the biggest weekend in the world. And frankly, it's great to be in Vegas. It's electric.
Bob, people see value, a lot of value in your content. And people, therefore, see value in your company. And we know there's been plenty of reports of a $14 billion offer for the business. Are you for sale?
So look, as a management team and our board of directors, we are focused on shareholder value creation. The most predictable route to that is execution. So we are laser focused on execution, driving Paramount Plus, elongating earnings in the traditional media sector, opening movies, etc. But simultaneously or in parallel, we continue to look at other options as we have been, including transactional ones. So again, a lot of activity, but I think what's important about it is it really shines a light on the incredible value of Paramount Global. We have an unmatched content engine in terms of our studios, new production, whether that's episodic series or films, as well as irreplaceable libraries across demographics, whether it's kids with Nickelodeon, adults, etc. So it's an extraordinary asset. We're focused on maximizing the value of that asset, again, day to day through execution, but also continuing to look at other routes.
And this is a sensitive one, Bob, but we've had analysts come on the show and say, you know, there are just too many players in the space. And you've got to be huge. You can't even just be medium-sized. From your perspective, with Paramount Plus and streaming, are you getting to profitability? I know you've got your earnings around the corner, but how soon can you sort of deliver that? Because I know you spoke to that in the third quarter, for example.
Yeah, so I'd say a couple things. One is you're right, that narrative is out there. There are people with that point of view. But I'd point to our third quarter call where we continued to show Paramount Plus is a growing service, continues to have the most net adds of any streaming service since we launched. Point one. Point two is on our third quarter call, we talked about the fact that we expect, and I have to be careful with my word choice here because, as you point out, our fourth quarter call is in 2 weeks, but we expect 2022 was in fact our peak streaming investment, not 2023, which we guided to. That says we're ahead of plan on the path to profitability for streaming, and we're very excited about 2024, but I'll have to leave it at that until our earnings call in a couple weeks where we'll have more to say.
Right. Bob, a global CEO has to pass a lot of data. Quantify the impact of Taylor Swift for me on this Sunday's Super Bowl.
Look, Taylor's obviously a phenomenon. She's a force in music. For all of us that have seen her tour, it's incredible. And she has, without a doubt, been incremental to audience on the NFL. There's different points of view on how incremental, but she's a great addition, widening the net of the NFL viewer even further. We're looking forward to having her here in Vegas this weekend at the game. And I think it'll be just an incremental thing. But the main point is the NFL on CBS and Paramount Plus is just an extraordinary property. As I said, we set the high water mark already for a Super Bowl in terms of ad revenue. It's looking like we will set the high water mark on viewing. And is Taylor part of that? Yeah, she probably is an incremental part of that. But it's just great.
I'm tuning in for Usher too, got to be said. Paramount Global CEO Bob Bakish, it is so good to speak with you. Thank you very much indeed.
Thank you.
All right, coming up, X is teaming up with the WWE for an exclusive weekly series. We hear from Brett White, ex-head of partnerships and talent, on that deal next. This is Bloomberg Technology. A WWE series is coming weekly to X. Brett White, ex-head of partnerships and talent, outlined it all for us earlier. Have a listen.
We couldn't be more excited, obviously, about the new initiative that we're doing with WWE. We announced the partnership yesterday. We are in market here in the next, call it 5 days, with assets to start selling the show. We've got a lot of interest. X is what I would say the home for wrestling fans. We're going to go very big when it comes to what this offering is. The idea of catering to an audience. Last year alone, we had 59 billion impressions when it came to wrestling alone. So the idea that we can actually super serve this incredible content to an audience that is there, that is vibrant and waiting for it, couldn't be more exciting for us. So we are ready to go and in market.
When does this turn profitable? How many of these types of partnerships do you need to really make money off of this?
That's a great question. I mean, it really is, when we've worked with Nick Khan and his team, trying to figure out exactly what the mechanics are financially, we're going to be playing these episodes once or twice a week on X. They're going to be on platform for in perpetuity, honestly. And we'll start making money, over the course of the year. We'll see how the financials actually work out. But the investment that we're making in the content really is, at some point will become profitable, probably in the next couple of years.
I think, there's been a lot of news this morning coming out of X. You also have the Super Bowl and bet-related stuff. But just lay out the partnership strategy. Your job title is Head of Partnerships and Talent.
Yeah.
What verticals do you expect to move into? Your background's in wrestling over at Turner and other things. But there is a difference here between pure sports, live entertainment, and then you're doing a lot in news as well.
We are. And so I got here, thank you, Edward. When I got here 4 months ago, I really kind of went on a listening tour and tried to figure out exactly kind of what the audience was looking for, what consumers wanted. And it is news, it's entertainment, it's fashion, it is sports, and it is wrestling. And so when we look at the portfolio, we have an incredible relationship with all of our sports partnerships, whether that be NFL, MLB, NBA, a multitude. We have 1,000 publishers through our Amplify business. We have 80,000 content creators. We're going to continue to build out a great content partnership business, but also start to serve original contents to an audience that we believe is worthy of and wanting it. So when we went after Don Lemon and Tulsi Gabbard and Jim Rome, we really knew that as we build out this kind of bespoke content, this is exactly what the audience and the consumers on X are looking for.
That was Brett White of X. Caroline, what you got?
I don't call you Edward nearly enough, Ed. We thank you.
Let's check in on the markets. Friday's session is also a little bit about social media. We had Pinterest reporting earnings, and as we reflected on, top-line growth of 12% missed estimates. Monthly active users did well. But as always is the case, you look at Snap down 0.5%. This theory is building out. The very big social media companies are doing well, or advertising-based companies, and the very small ones, there's a lot of concern. Meta Platforms higher by 0.1%. They had a blowout quarter where the AI story was going through to the advertising or their legacy business story. Also got Google, parent Alphabet on there, up 1.8%. A lot of feel good around their AI story of late. Those themes are still in place. The big do well, the small we're a little bit worried about, Cara.
And let's talk about one of those key players that, well, is ultimately still finding its footing under new leadership and is airing, well, different types of content. For example, X has just had the Russian President Vladimir Putin saying his country hasn't achieved its objectives in Ukraine yet. In a video from Tucker Carlson Network, Putin told the former Fox News host that he could consider negotiations if the US stopped supplying weapons to Kyiv. This is the first time, actually, that the Russian leader has given an interview to Western media figures since the invasion of Ukraine. The full interview was also published on, as I say, the social platform X. Let's talk about all of this with Jennifer Greigel, social media expert, associate professor of communications at Syracuse University. And Jennifer, what do you make of, ultimately, the amount of people viewing this in an unedited form? How is the media landscape changing?
Yeah, and again, I think you put it well. It's like airing different types of content. And I just saw your last clip too. The head of partnerships at X has been going on a listening tour. Well, I guess I was going on a listening tour last night too. Like, for one, I had kind of a hard time finding the interview on X, Twitter. I'm not sure it was really a story about that platform, though I do, think that there is value in, kind of discussing that Musk made a commitment to at least platforming this video. But I also found it on YouTube as well. So I don't know. I think there's some other forces going on here too, because it definitely was like unusual content, right? Like, this is not something you normatively see here in American discourse. So I think there's a lot of factors. I think it speaks to the nature of the internet. It's a complicated space, though it has these norms, right? But something different kind of pierced through over here, and it may also involve older technology too, like the .coms, the websites. Tucker Carlson's website seemed to play an important role in that. So, and we don't really have any insight into really how many people viewed this, because there aren't analytics on things like older platforms like that, a website.
And to that end, I think you were referencing in the break that you can see how many people have viewed a pinned post, but ultimately, how do we know how many minutes of that has ultimately been consumed, and we therefore are left to perhaps, ingesting memes and smaller parts of it? How does that make us yet more siloed rather than looking more broadly?
Yeah, well, I would say the norms, at least in the West, and the discourse coming from the East is we're getting it through memes. We're getting it through news stories in our press. The difference here was that it was, as you were saying, it was just kind of uninterrupted. It was unfettered information coming through in a 2-hour block. So for me, again, that was what felt like something that was different and maybe discussing a bit. The discourse had changed, so we'll see what the market thinks of this.
For me, it's worth discussing both the science and the art behind video content on social media platforms, right? So that was a pretty long interview. And, we on this show, Caroline and I, we post clips of interesting conversations on X, on Reels, and on YouTube. Sometimes we might do a longer form on YouTube. But as I understand it, the basic science is that the attention span of the viewer is limited to that much shorter bite, or they seek out something very long. What did you learn about duration video on the X platform from what happened last night?
Well, I think some people were bored and tuned out, kind of with the history in the beginning. 2 hours is a long clip. But just the fact that a 2-hour clip was available and that there may have been an attention audience behind it, given, what Carlson brings to this. So for me, it was really understanding how this was, I'm trying to make sense of it, honestly, but it's almost like a new media formula that's rooted in the internet. So it was like Musk provided a platform which acts a little bit like the broadcast, and gets it, out to people. And then Carlson had the access, but also his own audience. He delivered attention to this topic and also access to a source. Yes. And Putin was the source, right? So, but really for me, what was interesting was that, at least in the United States, you don't really have access, freedom of information to stuff like that. 2 hours of Putin. So again, call it what you want, propaganda. It's obviously meant to influence, but we don't usually have that type of access into information coming directly to Americans. But I think it also went out to other people in the world too. I don't think it was just us as an audience, but I do think that, again, you're seeing discourse on Twitter, X today, people who feel kind of safe in giving their reaction to that interview. But I think a lot of people aren't having a conversation maybe about what was said, even having, discourse, with others publicly, especially. You won't see that kind of stuff on social media. Maybe you're at a coffee shop or on a kitchen table, but it feels like there's a silent audience, and I don't really, know how big it is, but I do think people listened last night.
Silent audience, one to dig into ahead of the election, of course. Jennifer Greigel, always great to communicate with you, Associate Professor of Communications at Syracuse University. We thank you. Ed, what have you got?
Yeah, another story we've been tracking. Astronauts from Turkey, Italy, and Sweden returned to Earth on Friday, ending a private 3-week mission to the International Space Station. Their SpaceX capsule splashed down in the Atlantic Ocean off the Florida coast this morning. The countries paid about $55 million apiece to Elon Musk's company and Axiom to finance that mission. All right, coming up, FanDuel CEO Amy Howe joins us next as football fans get ready to place their bets on the big game. That's coming up next. This is Bloomberg Technology. It is Super Bowl weekend, and the big game between the San Francisco 49ers and the Kansas City Chiefs is going viral. On Google Trends, searches for both teams have skyrocketed, with questions like where to buy a new jersey to which Super Bowl is this one? Spoiler, it's Super Bowl 58. Halftime show star Usher's getting a big boost as fans Google his song. Hit single Yeah is the most searched for across America since his slot was announced. The romance between Taylor Swift and Casey's Travis Kelce is also in focus. Will she be at Super Bowl 58? Finally, there's a battle for TV eyeballs by tech advertisers. Snapchat's debut Super Bowl ad hopes to convince users its platform is safer and more authentic than others. And Uber is reuniting Ross and Rachel from Friends in a commercial for Uber Eats. And as we discussed earlier, for the first time, the game will be streaming on Paramount+. Caro.
Meanwhile, we've got to talk bets, Ed. They are rolling in. Big game approaching, and joining us to talk all about how people are doing a bit of a flutter is Super Bowl weekend. Ahead of it, FanDuel CEO Amy Howe. Amy, it's great to have some time with you. And just, I think of last year, I think of the almost, 10 million bets placed in the United States. How many are you anticipating for this particular game?
Well, what I can tell you is every year we set new records, and this year definitely will not disappoint. I mean, this is going to be one of the biggest years. It's a phenomenal matchup between the Chiefs and the 49ers. But if you go to FanDuel, you have an opportunity to bet on 600 different pre-live markets. There's a huge live offering. And as you can imagine, there's a ton of popularity around the player props, particularly Travis Kelce, but also Mahomes and Christian McCaffrey. And don't forget, you still have an opportunity to go onto the app and decide if Rob Gronkowski is going to make his redemption kick. And if you pick correctly, you'll get a share of $10 million in bonus bets. So there's really something for everyone this year.
Amy, I am in truth a fair weather 49ers fan. Of course, I watch the game. But it raises an interesting point in the context of betting, right? How many people do you see come in and place a bet just for this game that might have otherwise just sat out the rest of the season? What kind of short-term spike in new users do you see visiting your platforms?
Yeah, I mean, Super Bowl is the single biggest acquisition moment, right? And one of the things that's wonderful about it is you get a ton of recreational users who are, first time to sports betting, and what they're getting exposed to is just the excitement of it, right? The fun, the game within the game, and it really elevates the experience. So there really is something for everyone. And one of the things that's been great about this year is with so much discussion around Taylor Swift, it's actually drawn a lot of women to the platform as well. About 33% of our new activations are women, which is really exciting and just demonstrates the breadth and the power of what we're doing every day.
That's fascinating. Talk to us a little bit more about demographics, because many would say, and I don't know whether it's a cynical view or not, that the legalization process in the United States has in many ways been understood to be because of viewership. Ultimately, younger people are placing bets on sports, and now they're coming to view it far more across cable and also now across streaming. How much are you seeing an older generation versus a younger generation on your platform?
Well, I mean, the honest answer is over time we're seeing both. I mean, what happens is when states started to open up back in 2018, it tended to skew a bit more towards a younger male audience. But as we're now, 5 to 6 years in, since the Supreme Court decided they would let the states legalize, you're getting a much broader, much more recreational user. And I think a big part of that is the role that the leagues, right? We have a phenomenal partnership with the NFL and the NBA, and we're making it accessible, exciting, and most of our bettors are betting less than $20 on the platform, but it makes the actual experience that much more exciting.
Amy, let me show you something real quick. This is a chart summing up the Swift effect, or the Swiftie effect. Total Instagram followers monthly for Travis Kelce after that September 24th attendance, okay? So you get it, you get the data. Are people literally betting on whether or not she'll turn up, or are we going more specific on that? Like, what is she going to wear to the game? What's more, likely? Super Bowl ring, engagement ring. These are real things that people talk about, by the way, just for what it's worth.
They are real things. Actually, in Canada, in our Ontario province, you can go on and predict whether Travis is going to propose to Taylor Swift at the end of the game. In the States, unfortunately, you can't, there are no prop bets on Taylor Swift. But what I can tell you is ever since Taylor Swift was on the scene, the number of player prop bets for Travis Kelce has more than doubled. So she has certainly brought a lot of new engagement and betting activity on Travis Kelce in particular.
Engagement of a different form. We thank you. FanDuel CEO Amy Howe. Brilliant to spend some time with you.
Okay, Affirm shares are down around 13%, putting them on track for their biggest drop since October after the buy now, pay later company's 2024 forecast for annual transaction volume slightly missed estimates. Pleased to say Affirm CEO Max Levchin joins us now. And that seems to be the pretty micro focus, Max, the forecast for transaction volume. Should the street be concerned about that?
No, I'm afraid I can't give the street that credit whatsoever. We had an absolutely blowout quarter. Every number top to bottom increased our estimates for going forward and are showing no signs of slowing down or weakness or anything of the sort. I rarely argue with the market, but I think the team worked too hard to accomplish too much, too well, where I think we'd be okay with it.
We're just showing the highlights from the quarter gone, and top line you beat considerably, matching what the street expected from a loss per share. What was the biggest factor on that top line growth of all of the different products you're now offering?
I think across the board we did extremely well. We posted just really strong holiday season. Our partners Shopify were a large contributor to our growth, outpacing the average. The card has been scaling. We bragged about 400,000 active cardholders in our November investor event, only to show that we have 700,000 actives and growing pretty rapidly now. So there's quite a lot of things that contributed to the growth, but overall the company has just performed across the board really well.
Can I dig in a bit more on the gross merchandise volume and value? And I mean, ultimately, you call it out in your earnings, and you said we've posted the fastest year-over-year GMV growth rate in over a year. And you're basically saying, look, we can show how we operate our business with excellence. Then give you this moment to speak to an investor and an analyst community that is saying, look, they're slightly worried about what they think is a GMV deceleration for the fiscal second half of 2024. You say it's the guidance is the floor. What more can you say to an investor base that for some reason is determining this as a slowdown and they're worried?
No, I think the best way I can speak to our investors is by posting more results. Any form of trust me, I'm not a crook, is always met with great skepticism. So we'll just continue posting results. The results from last quarter more than speak for themselves. The blowout growth we've shown is the exact numbers that we were gunning for, and we'll keep gunning for better and better numbers that get us the floor. And we don't want to change our guidance strategy at all. We like a bar that we're going to aim to exceed for ourselves.
Well, a lot of analysts can see that. Truist Securities' Andrew Jeffrey saying that we'd be surprised by the magnitude of the slowdown. Bloomberg Intelligence also saying that they see momentum and they don't see this sort of slowdown. So tell us about momentum and ultimately about a U.S. consumer that feels rubbish about the economy, but the economy still continues to go incredibly well. What are you seeing from a determination to spend and to spend with you?
So the share of wallet across our many, many partners is generally increasing, and we're very happy about that. U.S. consumer, I think, if I'm allowed to speak on behalf of the U.S. consumer, are feeling a little bit differently than they are acting, and I have no idea who to point to that. But there are folks that are having a hard time paying their bills, and you can see that in the credit card industry building up their delinquencies and reporting increase in building up reserves. None of that is true for us. We posted another quarter of flat quarter and year-on-year delinquencies 30 days higher, et cetera. Those are all measures of our excellent credit management. A firm consumer, the ones that we actually lend to, are doing fine. They're paying the bill, paying them on time without, I might add, any sort of late fees or gimmicks, tricks. The industry is starting to show signs of cracking where folks are maybe a little bit overextended. I think that's probably what's bringing consumers' mind. That said, the holiday season was quite strong for us. We saw really great engagement from occasional buyers that went to our online partners and bought their gifts, all the way to our cardholders that use the card for everything from daily spend to gift buying. And so we feel very good about our ability to help folks that can borrow. And most important thing, I just want to always add, because we don't charge late fees, because we don't compound the interest, our incentives are profoundly aligned with those that we lend money to. They can't pay us back on time, on schedule. We will make less money. Our growth is actually driven not just by the fact that there's a lot of demand for buying, for preferring the demand for a firm-specific product and our ability to sell.
So I understand that. You and I have talked a lot about buy now, pay later, but also the other products that you offer, right? This week, I think what Caroline and I heard from CEOs, markets guests, the consumer's strong, but as you've just pointed out, credit card is becoming a notable data point to track. How does that impact you?
Obviously, we watch all the industry data like everybody else. Again, our borrower has done very well with us. And when we lend money, we take into consideration their performance across other borrowing devices they have, such as credit cards, et cetera. So we know that a firm consumer is quite strong on their feet and they're able to pay us back. And that's shown in our numbers and in the numbers that we're reporting. You can see them more frequently than our quarterly numbers in our EBS reports, et cetera. And so we feel quite good about the segment of the economy that we serve. I think there are folks that are starting to, perhaps it's really the running out of the pandemic savings that's taking place elsewhere. We are able to borrowers successfully.
Max Levchin, it's great to have some time with you. Thank you very much for joining the show. Affirm CEO on the back of their numbers. Meanwhile, that does it for this edition of Bloomberg Technology and the week. And we've got a big weekend to be watching some sports in.
Yeah, Super Bowl, recap all the conversations, Super Bowl on our podcast, wherever you're getting your podcasts. We post them basically everywhere. There's the examples. Happy Super Bowl weekend. This is Bloomberg.